Big day today. Of course, it's election day. What's your word of the day?
My word of the day is actually predictable. And so I think that there's a few things that are easily predictable on election day today. The first is that it's going to be a catalyst no matter who wins. And the reason it's going to be a catalyst is that we get to do away with certain uncertainties, if I can say both conjoined. So there's lots of rhetoric that comes with being a candidate that doesn't necessarily transition into someone who's acting in office. And so whether that's taxing unrealized gains or whether that's across the board tariffs, there's lots of things that have no hope of making it into policy. And the market will get rid of that consternation and no longer have to discount possibilities for those.
Okay.
Secondly, whichever administration wins, they've both served in the executive branch. And so we know what their priorities are. And for in the Harris administration, we know that that would be home building. We know that that would be green energy and clean tech. And we know that that would be increased insurance coverage. For a Trump administration, we know that that would be energy. We know that that would be, the public incarceration companies as we look to deport, mass deportation through the administration, and probably crypto as well. So we know what sectors will get a lift from which administration.
You know, just pulling on that theme for just a bit, CNBC.com came out with a list of stocks that should benefit if there's a Trump victory, stocks that should benefit if there's a Harris victory. On the stocks that should benefit from the Trump side, it's actually like commodity plays, Nucor, Cleveland Cliffs, and on the Harris side, it's quote-unquote clean energy plays, EVgo, ChargePoint Holdings, Plug Power. Agree with that thesis that you can kind of get that granular? I know you gave us some other plays, but agree with that idea there? 100%.
And you know, when you look at the names you read from the Trump administration, very consistent with what I was saying in terms of a more deregulated environment than a Harris administration might pose. So very consistent, I think, with my thinking.
What about bonds? We actually had a guest on earlier today saying you want to stay away from bonds if Trump wins, kind of neutral on bonds if Harris wins. Agree with that thesis?
I think bonds and yields are going to be dictated more by what's going on in terms of whether or not we're going through a reflation and what Powell has to say, more so than the administration itself. Obviously, their outlook is important, but in terms of the bond market, perhaps whether or not we get a divided Congress or whether or not we see a red or a blue wave might be more indicative of what we'll see in terms of the bond outlook.
All right, I want to go back to your predictable theme. We had Craig Johnson from Piper Sandler earlier today. He says historically, since 1900, from election day through the end of the year, the S&P's up 1.75%, the Russell up nearly 3%. So if things are predictable, do you see that pattern playing out again this year?
I do. And it might not play out the same throughout the end of the year. I certainly see a bump over the next month. I think we will have to revisit some macro concerns. I hope not. But, we've seen core CPI bump back into that 30 to 40 basis points range. And, recall that when I switched from bearish to neutral back in the early summer, it was because we saw it fall out of that range. And we saw it go to 0 and we saw it go to 10. And so I think it's worth keeping an eye on. And if we do see a reacceleration there, then it will obviously, I think, pose a headwind to a continued rally.
All right, so we had the mystery chart up earlier. It was your pick. So what is your pick and why?
So I think you know as well as anyone that even while I was neutral and bearish over the last year, there are opportunities, and those opportunities are born out of companies that will grow their earnings 20% plus. So my pick today is Zim Shipping. And I think it's one of those companies that is in the midst of a structural supply and demand imbalance. Those are the companies where consensus simply has the earnings wrong. Take this year, for example, it was projected to have negative earnings. It's going to put up $12 a share. When you look at 2025 estimates, it's at negative $1. So the street has not yet factored in their true earnings growth trajectory. And those are the types of opportunities, not only where the street has it wrong, but where it's going to grow 20% plus, where everything else is growing in the low to mid single digits.
Kind of a timely pick. Shares are up 1.75% right now in the pre-market, but I actually pulled this chart myself. Since the start of the East and Gulfport strike, shares are actually down over 4%. So explain that one to me. If there's a structural imbalance, why are the shares declining?
So I think we have to look for a longer time frame. I appreciate your cherry picking, Frank, but what's going to drive this is two things, right?
You got to give us one thing because we're almost out of time.
All right. So the turmoil and the geopolitical situation in the Red Sea, as well as rates being 5 times what they were last year.